Hi, this is Sandy Botkin, author of the best-selling book, Lower Your Taxes Big Time. Over the past 20 years, I have taught thousands of home-based business owners how to save millions on their taxes. I spent 3 years in the tax department of the international accounting firm Touche Ross, and also 5 years as a legal specialist in the Office of the Chief Counsel for the Internal Revenue Service. Currently, I'm the CEO of the Tax Reduction Institute. Over the next few minutes, I'm going to explain why you'd be brain dead not to have a home-based business. I believe you will find that this is going to be the most important 4 minutes of your life when it comes to your financial future. So you may want to take some notes and put aside anything that might distract you. First of all, I want to emphasize something right up front. The rich know something that most people don't know. They have a secret. And the secret is that we have 2 tax systems in the United States. Now, when I say that, most people think that there's one for the rich and one for the poor, and that's not quite true. There's one to make you rich, and then there's one to make you poor. There's one for employees, which is designed to take your wealth and make you poor, because you are taxed on $1. And then there's one for self-employed individuals, which is designed to create economic growth. And the reason for that is that small business generates over 70% of the job growth in North America. It is not IBM, it's not Microsoft or American Airlines, it's small business. So Congress passes good tax laws for small business. In fact, the important point is that small business get to take deductions first before they pay any taxes, unlike employees who have to pay taxes on $1. You can save big money by taking advantage of these good tax laws. And these laws are available to you in business, whether it's in full-time in business or part-time or just in your spare time. It doesn't matter as long as you run your business with an honest expectation of profit, which means you're really trying to make money. In fact, if you know what you're doing in a small business, you have the potential to write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not kidding when I say that, by the way. You can set up a pension plan that makes any government plan seem paltry by comparison. The potential is just enormous. Good proof of this was illustrated by a lady named Jane Bryan Quinn. Jane Bryan Quinn is a nationally syndicated economist. You may have heard of her. She is a nationally known commentator on personal finance, with books and columns read and trusted by millions. She did a study of a couple who made $40,000 a year. And $40,000 didn't go that far. So the husband said to the wife, honey, you got to go out and get a job, which she did, and she made an extra $20,000. Now they're looking at their bank account, and they see no difference at the end of the year. I mean, she's making $20,000 more than she made the year before. What's going on? Did you ever hear that you have to have 2 incomes to make it in this country? Do you know why? You're about to get a 6-month financial planning course in the next few minutes. Follow along as I show you why the extra job was the wrong decision. The following example is based on 2009 tax rates. On that $20,000, they have to pay $4,845 in new federal and state taxes. Most of that was non-deductible. They have to pay Social Security of 7.65%. On $20,000, that's $1,530 of Social Security, which is non-deductible. We assume that they drove 10 miles a day round trip. And that's probably pretty conservative, I think. But let's go with that. 10 miles a day round trip, 5 days a week, 52 weeks a year at IRS's current 55-cent a mile rate. That's $1,430 of commuting, which is non-deductible. We assume lunch is at work, and we assume that they spent $7 a day, 5 days a week, 50 weeks a year. That's $1,750 of lunches, which is non-deductible. We assume that you have to have clothing, better clothing, in fact, if you're working, more upkeep, because now you're working, you're going to have more dry cleaning, and that's gone up by at least $1,200 over not working. And finally, with both spouses working, you think they want to cook? Heck no! They want to eat out, where their food costs have gone up by at least $2,000. And what about childcare? I bet you they spend at least $125 a week in our example. I'm not sure we can get childcare for 3 kids for $125. But $125 a week, 50 weeks a year is $6,250 in childcare. Most of that is non-deductible. In fact, all you get is a little bit of a credit on that. Out of the $20,000 that they've earned from the part-time job, they are only left with a staggering $995 a year. They're putting in tons of hours working, they're putting up with a commute, and they're putting up with a boss that is spelled backwards, double S-O-B. You know, I know it sounds funny, but it really isn't. And people are working 2 jobs, 3 jobs, and nobody is able to watch the kids. So what's the answer? The answer is to take advantage of the greatest tax write-offs available in America. And that is by having a home-based business and working that business like a business. Nothing can be better than that. Because if you know what you're doing, you can write off, as I mentioned, part of your house, your spouse, the equivalent of your kids' education and weddings. You can set up a pension plan that makes any government plan seem paltry by comparison, and there's much more than just the tax benefits. For example, you get tremendous time freedom. You can work out of your home. You dictate your own hours and not be subject to the boss's whims. If you need to go somewhere, or go to your kids' basketball games, or go to your son's or daughter's music lessons or concerts, you can do that. There's no commute. There's no liability, or very little liability with home-based businesses. You don't have any employees. And you can make unlimited income. And that's probably the most important factor for having a home-based business. There is no glass ceiling of any type. Having a home-based business is probably the smartest thing that anyone can do. And what amazes me is that people will work overtime to try to get ahead in a company, when frankly they should be putting in as little time as possible to avoid getting fired and getting a part-time home-based business going. Who knows? Maybe that business will generate enough money where you can quit your job altogether. Wouldn't that be nice? That's the point. Having a home-based business will generate enormous benefits for yourself and your family. It's something you should really consider, and it will make your life a lot less taxing. I would strongly encourage you to carefully evaluate and get started with your own home-based business today. The tax benefits are incredible, but a home business has so much more to offer. Extra income, being your own boss, financial security, setting your own hours, working from the comfort of your home, more time with family, and the list goes on and on. Most importantly, you are working on your dream instead of someone else's. Now that's the beautiful thing.
The U.S. government is currently spending trillions of dollars trying to stimulate our economy. Most likely, our taxes will increase as a result. And when our taxes increase, our cash flow will be negatively affected. We'll have less money to spend and will experience increased stress as a result. The good news is that the U.S. government has come up with a stimulus plan for individuals. The program will help you keep more of what you earn. It's a tax refund program that's available to everyone who wants to participate. You'll also be able to receive a 17% or more tax deduction from your apartment rental fees or your home mortgage fees. And you'll receive the same deduction on your monthly utility bills as well. You'll receive a 50% tax deduction on your gas pump prices regardless of how high prices might rise in the future. You'll receive a 50% tax deduction when you dine out with a friend or acquaintance. You'll receive a 100% tax deduction on fees you pay for health insurance and life insurance. You'll receive a 100% tax deduction when you purchase a new high-definition digital television. And you'll also receive a 100% tax deduction whenever you and a friend attend an entertainment venue. The good news is that these tax deductions are available to everyone who wishes to participate and who qualifies. To qualify, you need to be a home-based business owner. Here's why this program works. In the United States, you fall under one of 2 tax systems. One is for employees, and the other is for business owners. As an employee, your employer pays you a gross amount. The net amount that you receive in your paycheck is whatever remains after your taxes have been extracted. What this means is that all of your personal expenditures are made using after-tax dollars, which were based on your whole income. As a business owner, you make business-related purchases using pre-tax dollars. You are taxed on the income remaining after you've excluded your business expenditures. The key then, to keep more of what you earn, is to operate a home-based business. Keep good records and convert as many of your normal purchases as possible into business-related expenditures. First, let's show you how to convert personal mileage into business mileage. In our initial scenario, we'll assume that you have not yet set up your home office. In this case, traveling from your home to your first business activity counts as personal travel, as does the travel home from your last business activity. Everything between counts as business mileage. So the first thing you should do is rent a mailbox at either the U.S. Post Office or a UPS store, whichever is closest to your home. Checking your mailbox will be your first business activity each day. The last thing you should do each day is visit your local Starbucks. There are probably at least 5 in your local neighborhood, and you'll be able to visit a different one each day. Most Starbucks have a bulletin board where you can post flyers. By checking that your business flyer or business card is in a prominent position, you will be participating in a business activity. This is a great place to chat with a patron and give them your business card. Either activity will allow you to deduct 50% of the cost of your latte as a business expense. In our second scenario, you have set up an office in your home. In this case, business mileage starts and ends at your doorstep. With either scenario, a very simple way to ensure that each intervening stop is business related is to talk with folks and hand out your business card whenever possible. The IRS is currently allowing this amount per business mile driven. In most cases, though, you'll benefit far more by itemizing your vehicle expenses. Because you'll probably be transporting prospects, clients, and business associates in your vehicle, you'll want to keep it in pristine condition. Here are some vehicle expenses that will become deductible based on the business miles that you drive annually. For example, if 50% of the miles you drive annually are business related and you spend $20 every week to refuel your vehicle, you'll receive a deduction of $520 for this one expense alone. First, let's assume you live in a 6-room home, one with 3 bedrooms, a living room, a family room, and a kitchen. And you're able to convert 2 bedrooms into offices, one for you and one for your spouse, and you're also able to convert your living room into a presentation room for your prospects. If you do that, because 3 of the 6 rooms in your home are exclusively devoted to your business, 50% of your home is used in a business capacity and 50% of your home is for personal use. What this means is that 50% of the home-related expenditures listed here are now legitimate business deductions. In this case, for example, if you paid $12,000 in mortgage interest per year, you'd receive a $6,000 deduction for this one expense alone. Now, let's assume that you have a lease on a small 4-room apartment, one with a single bedroom, a kitchen, a dining area, and a living room. If you went ahead and converted the living room into a combined office and presentation room, then 25% of your apartment would be business related and you'd get a 25% deduction on all of your apartment related expenditures. Obviously then, if you were responsible for paying $1,000 in rent every month, you'd get a $3,000 deduction from the government on this one expense alone. All home office related expenditures are 100% deductible. Any presentation room expenditures are also 100% deductible. If you are a dog lover, rejoice. Your canine companions can provide added security for your business. Your expenditures on their behalf are allowable business expenditures. Veterinary care is very expensive. Those costs are much easier to bear when you know that good old Uncle Sam will allow you to write those expenses off. Every time that you visit a big box store or a pet supply store, pick up some cans of dog food and some doggy treats. Your canine security team will appreciate it, and you'll be making the trip business related. If you are an employee and have your medical, dental, vision care, and life insurance payments deducted from your paycheck, those payments are not deductible. But if you have a home-based business and pay for those insurance costs yourself, the expenditures are all fully deductible. One of the greatest things about having your own business is that you can take a prospect to an entertainment venue and then, either before or after the event, talk to them about your business over a fine meal. The entire experience is deductible. The rules are simple. In order to keep more of what you earn by reducing your taxes, you'll need to operate your business professionally and keep good records. The IRS will want you to keep track of the following information for each meeting: who attended, where you went, when you went there, why you went there, and the expenses that were incurred. And to keep the IRS happy, which is always a good thing, you'll also want to maintain a vehicle mileage log, an office activity log, a meal and entertainment log, an overnight travel log, and a business presentation log. But please, don't be intimidated by the record keeping. It's very easy, and you'll barely notice it once you internalize the process. Remember, the secret to keeping more of what you earn is to become a home business owner. The many thousands of dollars that Uncle Sam will return to you each year will begin once you decide to actively participate in building a home business. Although tax reduction is one of the benefits of having a home business, it's not the primary advantage. Obviously, the main reason to acquire a home-based business is so as to develop an income far greater than anything available to you as an employee. A well-structured home-based business will allow you to leverage your efforts by developing a network of people and by developing additional internet-based income streams. Your first goal then is to seek out a home-based business that appeals to you. I'd recommend that you choose a home business with a track record, one that's been around for at least 5 years. Choose a home-based business whose stock is publicly traded. This gives you complete visibility, something you won't get in a company that is privately held. This is because Securities and Exchange information is much more authoritative than anything you'll receive via a Google search. Choose a company that provides a written guarantee that the compensation plan will never be changed negatively.